Welcome everyone. Uh, Thank you so much for joining this webinar. This Easy Community is actually a platform where we actually bring a lot of eminent speakers. Those come on the platform and share their knowledge. In this series of those webinar, today we are actually going to talk about very important topic, which is code of ethics. Uh, so we all know, like, and being non CA, like uh, citizen of India, I what I understand, the CA is actually a backbone for our economy, and as we know, it's a very known dialogue. Power, great power comes with a great responsibility. So that's why this is something which is actually related to the today's topic. And to deliver this topic, to guide us, we have someone who does not need the introduction, uh, CA Ravi Patwa sir. He is been very known in the fraternity. Uh, he's been the managing partner of chartered accountancy firm RKP Associates. Uh, he's been, uh, trustee and managing committee member of Hindustan Medical Institutions, a larger philanthropic institute of Birla Group. He's been a member of Assam State Council of FICCI. He's been member of Eastern Regional Taxation Council of SOCHAM. He's member of Airport Advisory Committee of key airport in Assam. Uh, we also how I met Ravi sir. Last year when he was actually holding a position as a chairman with Eastern India Regional Council of ICAI for the term 2022-23. He's also held a position advisory to National Council of Institute of Internal Auditor of India for the year 2021. So there is a long list for this sir, like of his achievement and different position he has actually acted in past, and he is actually currently acting upon. And now I'll request Ravi sir to share his thought and share his knowledge with us. Ravi sir, over to you.
Thanks a lot, Gaurav. Very happy afternoon to each one of you present over here, my dear participants. Well, it's a post-lunch session, and I understand that after a sumptuous lunch, many of you would be feeling like having a quick nap. But somehow, thanks to Gaurav, I am there between you and the nap. Anyways, what we are going to discuss today is something very, very important for the profession. We are going to discuss about the code of ethics. And I have been given to understand that the code of ethics that I should discuss should be basically covering the provisions which became applicable from 1st of April 2022. I am sure that 95% of the people present over here are chartered accountants. And all of you know that code of ethics, though it came into being in 1963, when Mr. R.C. Cooper was the president of the institute, and then it was first time changed in 2001 after 38 years, then again in 2009, and then 2019. So the current code of ethics which is applicable to us is code of ethics which became applicable from 1st of July 2020. And the volume 1 of this code of ethics was written in 2019 and volume 2 in 2020. And I'm sure all of you know that volume 1 basically deals with clauses which come from international body, that is ISBA, and volume 2 is more India specific. Whatever, we are not going into the details of that. But it is important to note that some of the provisions of code of ethics, when the code of ethics came into being in 2020, were deferred. Deferred in the guise of COVID. I'll repeat, in the guise of COVID. But there were other reasons, because many of the professionals felt that these provisions are too harsh for the profession and they should not be implemented right away. But later on, after two rounds of deferment, these provisions became applicable from 1st of October 2022 via the notification dated 29th of September 2022. And those provisions are basically related to three things. One is NOCLAR, which is very, very famous. All of you must have heard about it. Most of you would perhaps know about it. Still, we are here to discuss about it. And I would request all of you to give your views as well whenever there is a possibility, because I am here to share my views and not to give you lecture or give you gyan. I am there to share my views so that I can also get to know from all of you. That is the motto. When I talk to you on these provisions, I would also expect that something will come up which will enrich my knowledge as well. So NOCLAR was the most important provision that was deferred, and NOCLAR is covered in section 260 and 360. 260 for the members in service and 360 for the members in practice. And then fees relative to the size of the organization, that size of the CA firm, that was deferred, and that also became applicable from 1st October. And the third item which was deferred was taxation services to audit clients. So these three provisions were deferred. Now let us go through these provisions, and then we will also, maybe we can complete one provision, maybe we can complete NOCLAR, and then if there are any questions on NOCLAR, we can take them, or whatever the organizers decide. We can also go clause by clause, whatever you feel so. It is very important that when we talk about NOCLAR, we must understand about public interest entity. Now, this is a very common word, but nowhere in the Code of Ethics earlier public interest entity was defined. In 2019 Code of Ethics, public interest entity has been defined for the first time. Public interest entity, as per the new Code of Ethics, means two things. One, a listed company or a listed entity. So any listed entity could be a public interest entity. Secondly, two kinds of unlisted entities can be public interest entities. One, if these are defined by a regulation or legislation as a public interest entity. Any legislation or regulations or regulation which is in force in the country, if that defines a particular kind of entity as public interest entity, then that has to be treated as a public interest entity, irrespective of whether it is listed or not, number one. Number two, any entity for which the audit is required to be done according to the independence requirements that are applicable for the listed entity audits, or in compliance with the similar kind of independence requirements, same independence requirements as that of listed entity. In that case, such entities will also be considered to be public interest entities. So say for example, scheduled banks which are not listed, even those are considered to be public interest entities. Similarly with insurance companies, they are public interest entities under the second proviso. And most important to note here, although most of us would never ever do it, is paragraph 400.8, that any CA firm, if they feel so, they can treat any entity which they are auditing as a public interest entity. Nobody would like to do that, but guidance has been given on what kind of entities can be treated as public interest entities by the CA firm, and in that case, all the things applicable to public interest entities will become applicable to these particular non-public interest entities also, if the CA firm considers them to be public interest entities, and in that case, even NOCLAR will become applicable. There are four things for which the CA firm may have to consider any non-public interest entity to be a public interest entity. One is based on shareholders. If there is a wide range or a large number of shareholders, then that can become a public interest entity. Secondly, nature of business. If the nature of business is such, say for example, holding assets in fiduciary capacity, in case of NBFCs or so, then it can become public interest entity. Thirdly, if the size is too large of the entity, then it can become a public interest entity, or the number of employees are too big, then it can be a public interest entity. So under these four circumstances, a CA firm can consider any non-public interest entity to be a public interest entity. Now, why public interest entity is important, we'll discuss later. Now, applicability of NOCLAR. Where is NOCLAR going to be applicable? See, initially when the concept came in, NOCLAR was applicable to all public interest entities and even some non-public interest entities which are slightly bigger in size. But due to the pressures of the members at large in practice, these provisions have been curtailed down now, toned down, but perhaps the institute will gradually increase the scope of NOCLAR. So even though somebody is not falling under the scope of not doing any audit which is falling under the scope of NOCLAR, or some employee is not working in an organization which is falling under the scope of NOCLAR, still we need to know about NOCLAR to get ourselves ready for the future. So for now, the limited application of NOCLAR is prescribed, okay, where applicability in case of entities which are listed in a recognized stock exchange and the net worth is 250 crores or more are only covered. Even not all listed companies are covered. Listed companies listed in India and having net worth of 250 crores or more will have the NOCLAR covered, will have the NOCLAR applicability. Now, you may try to question 250 crores at which point of time. Now, this 250 crores is the amount which should be there at the end of the year for which the audit is being done, right? Okay. And it is applicable only to audit assignments. Please note, it is applicable only to audit assignments. NOCLAR's applicability is not there for certification work, review assignments, etc. It is only applicable for audit assignments for the practicing firms. And for the members in service, where earlier all members in service in case of these companies was considered in the original draft of NOCLAR, ultimately what has been passed by the council is that NOCLAR's applicability shall be limited in case of employees to only senior professional accountants of listed entities. Senior professional accountants of listed entities. Please note, it is not 250 crores here. Listed entities, senior professional accountants. Okay. And who are the senior professional accountants? KMPs are the senior professional accountants, key managerial personnel. So all CFOs will come under the fold of it. And if there are any other chartered accountants who are KMPs in that particular listed entity, then they will also be covered under NOCLAR. Okay. And, what would be the scope of NOCLAR? Two things. Laws and regulations generally recognized to have a direct effect on the determination of material amounts and disclosures in the client's financial statements. So any law or regulation which has a direct effect on the financial statement of the auditee will be covered, or other laws and regulations that do not have a direct effect on the determination of the amounts and disclosures in the client's financial statement, but compliance with which might be fundamental to the operating aspects of the client's business, to its ability to continue its business, or to avoid material penalties, will also be covered under NOCLAR. So even ancillary laws, say for example, pollution control license. The license from the pollution department will not have a direct material impact on your financial statement. But if you do not procure it on time, or if it lapses, then tomorrow your factory may be shut down, your plant may be shut down. So it will be covered under NOCLAR because the operating aspect of your organization may get impacted because of this particular law, or you may also face major penalties or material penalties because of this. So that will be covered under NOCLAR. Okay. And what are the kinds of laws and regulations which are normally, this is not an exhaustive list. These are just examples of some laws and regulations, right? Say for example, fraud, corruption and bribery. These will be covered under laws under these will be covered by NOCLAR. Money laundering laws. We all understand where the Anti-Money Laundering Act is going now. You are seeing day in and day out, immediately after the change in act has come into being. Already around 10 chartered accountants have been arrested, including a previous auditor of an organization. The last case was such that even the previous auditor who had left the organization's audit 3-4 years back has been arrested. So we have to be very, very cautious. Then terrorist financing and proceeds of crime. These kind of laws will be covered under NOCLAR. Securities markets and trading. So anything related to SEBI will be covered. Environmental Protection Acts will be covered. Public health and safety laws will be covered. Data protection laws will be covered. Tax and pension liabilities and payments, all taxation laws, pension laws, level laws will be covered. Banking and other financial services and products, etc. All these will be covered. So these are some of the examples of the laws which we must keep in mind while auditing the organization or while doing a major work as an employee of the organization. Okay. Now, what are the responsibilities of a chartered accountant when he has to deal with NOCLAR? We have used the word professional accountant here because professional accountant is the term used in ISBA, and the Indian Code of Ethics, the Code of Ethics applicable to us, has also taken this term from ISBA and used the same term, professional accountant. However, the word professional accountant has also been defined in the 2019 Code of Ethics, where the professional accountant has been defined as a member of the Institute of Chartered Accountants of India. Right? Okay. So what are the steps? 4 major steps that one has to take. First step is obtaining an understanding of the matter. So wherever you come across any suspicion of a likelihood or an act which has been committed of non-compliance of any law or regulation applicable to the organization, as already discussed in the earlier slide, then we have to first understand what is the matter. And then next, once we understand, we have to immediately address the matter. If there is a commitment of an act already, then we have to rectify that particular thing. Be it an auditor, be it or be it an employee. If an employee is involved, then he has to rectify or get it rectified. If an auditor is there who has come across anything like that, then he has to get it rectified by the auditee. Or if it has not occurred, but there is a likelihood of occurrence, then you have to deter the occurrence of it. You have to see that it does not occur. And then we have to disclose to an appropriate authority. Now, who would be an appropriate authority for an auditor? Say, for example, you are a chartered accountant doing the audit, and you have a signing partner who has not seen it, you have seen it. Now, your first thing would be that you should report to your assignment partner that this is what I have come to know, so we need to take action on it. If you are an employee, okay, we'll discuss about the employees later. Let us discuss about the professionals first. So we have to disclose it to the higher authority in our own firm and then comply with the applicable auditing standards. Right? If a fraud has come to your notice, then immediately 240 will come into being. 230 will always come into being. You have to immediately get all the documentation relating to, happening relating to NOCLAR done. There are other provisions of the standards on auditing which will come into being depending on what is the kind of non-compliance. So we have to see that all those standards are also followed. And once we have addressed the particular occurrence or likelihood of occurrence, then we have to determine whether our action should finish here or we have to take any further course of action. That again will depend on the kind of commitment or likelihood of occurrence which is there. Okay. And for that, we also have to consider the management response. Now, if the management has taken the appropriate action which is required, then there is a likelihood that further action on our part may be reduced. Or, on the contrary, the further action may have to be taken to a higher level. So what could be the further action? Further action could be disclosing to an appropriate authority Now, appropriate authority we are talking about in star 2 and star 3 both. In addressing the matter, when we are talking about the appropriate authority, we are talking about the appropriate authority within our organization, that in the CA firm, that is in the CA firm, or in case of an employee within the organization, within the entity. And here when we are talking about appropriate authority, it is outside the own organization. Say for example, you have come to know about some violation of SEBI laws. You may have to consider whether you have to report it to SEBI or not. This is the further action appropriate authority that we are talking about. In further action, you may have to report the matter to an appropriate authority outside. Say if a fraud has come to your notice, you will have to compulsorily report depending on the size and nature of the fraud. In case of a banking company, to RBI, or otherwise also to company law board and others, depending on the amount. Then the last course of action which you may consider is withdrawing from the engagement. You may have to consider whether you actually intend to carry out the audit assignment or not. Or as an employee, you may have to consider whether you need to resign from the organization or not. But please remember, even if you withdraw from the assignment or even if you resign from the organization, your work does not stop there. Your responsibility does not end there. It is essential on your part to inform the next auditor about the happenings. And your withdrawal or resignation from the organization does not absolve you from the responsibilities of NOCLAR. So whatever course of action you have to take, you must take before and after withdrawing from the assignment or resigning from the organization. Just because I have come out of the company, I have come out of the audit, so I am not going to deal with it, is not going to help you in any way. So you have to complete your task relating to NOCLAR, irrespective of whether you are doing the audit or not. And then, of course, most importantly, you must be in a position to prove that you have done everything which is required to be done. Documentation, SA 230, the mother of all standards on auditing, you must follow very, very well. Because unless your documents are very well kept, even if you do everything, you may not be in a position to prove that you have done everything. And that may create trouble for you. So what are the things which we may have to document? Just an illustrative list again, which I have prepared. This is not something which is exhaustive. So we should document at least these things. The matter that has come to your knowledge, the results of discussions with the superior or the management or those charged with governance or other parties, what discussions took place and what are the results of the discussion, and how the superior and the management or those charged with governance has responded to the matter. What action did they take and how they communicated the action to you? All that has to be recorded. The course of action which has been taken by the management has to be recorded. That is covered in C. And what course of action have we taken as auditors or have we taken as employees of the organization must also be recorded properly. And then how did we make the judgment that this action is sufficient and proper and no further action is required? What is the decision that we have taken and how did we come to that conclusion or decision must also be recorded properly in your documentation. And how has he satisfied himself that he has fulfilled the responsibility as to whether any further action is required or not. Once your action is over, then whether any further action is required or not, how have you evaluated it? And if you have found that no further action is required, then that documentation must be there. And if you take any further action, then obviously full documentation of what further action has been taken must also be recorded. Some salient features. Now, some of the things which are not covered under the scope of NOCLAR, matters clearly inconsequential These will not be covered. Inconsequential matters will not be covered under NOCLAR. Personal misconduct unrelated to business activities of the client or employer will not be covered. Some top employee of your audit organization is eve-teasing on the road in the evening. You need not worry. That is not coming under NOCLAR. Because please remember, NOCLAR will only cover those particular violations of laws and regulations which you come to know about, or you are supposed to come to know about in the normal course of auditing, or which you have come to know about while you had audited the organization. Either there is any finding that you have already come to know, then that will catch you, or otherwise, if it is likely that you should have come to know and you may not have come to know because of negligence, then that will also be covered under NOCLAR. And non-compliance, other than by the client or employer, this is very important. Anybody can do non-compliance of some other laws and regulations, but only these particular non-compliances by these particular kind of people will be covered under NOCLAR. Non-compliance other than by client or employer, or those charged with governance or management or other individuals working for or under the direction of the client or employer will not be covered. Right? So only done by these people will be covered. And professional accountant is required to address NOCLAR only when and if he encounters the same in the course of providing a professional service. In the course of providing a professional service. And since only audit work is covered, so professional service for the practicing chartered accountants will be while auditing, and for employees, all kind of work if he is falling under KMP. Right? An appropriate authority for the purpose of disclosure will depend on the nature of the matter. For example, the appropriate authority would be SEBI in the case of fraudulent financial reporting. So this we have already discussed. Now, whether statutory auditors are concerned with non-filing of NOCLAR, obviously they are. Still, some of the things. First, Code of Ethics requires auditors to comply with the same one. Secondly, weak internal check system in the company will be indicated by non-compliance with NOCLAR, and in that case, 2-3 things will happen. One, you may have to increase your substantive checking, so your whole audit program may go haywire. You may have to give a relook, and most importantly, even your internal control system you may have to check, and your IRC reporting may change. Right? Third, it indicates presence of risk factors which auditors need to evaluate under SA 315, identifying and assessing of material misstatement. Read with SA 265, that is communicating deficiencies in internal control to those charged with governance and management. Right? I've already said this. And then next one, it questions the sincerity or the governance environment, and hence the corresponding corporate governance report and director's responsibility statement, which auditors need to factor in under SA 720, auditor's responsibility relating to other information. This will also come into being. Now, many of us auditors will perhaps follow the first 3 points. When we come across a matter of NOCLAR, we will definitely think of IFC, think of control, think of increasing the substantive checking. But what does not come into our mind is that under SA 720 also we have a responsibility, and in most of the audits, I'm afraid I have to say this because this is what practically happens. In most of the audit cases, the director's responsibility statement is prepared post-audit, which is absolutely wrong, because even in your audit, we have to take cognizance of the director's responsibility statement and the corporate governance report. 720, SA 720 actually mandates it. This is just a format of auditor's report where it is already done. We are independent. We are independent of the company in accordance with the Code of Ethics issued by the Institute of Chartered Accountants, and together with the ethical requirements are relevant to an audit. So, Code of Ethics we have to follow. We are writing it here, and we have fulfilled all other ethical responsibilities in accordance with those required, these requirements and the Code of Ethics. We are basically writing that we are following it. Then we have to take this independence declaration while from all the employees who are a part of the audit team, including the partners and all. Okay, confidentiality statement also we have to get signed by everybody. I'm sure all of us are doing it. I've just kept it here. But all these signify that compliance with compliance with laws and regulations is important, and auditors must ensure that there is no non-compliance of laws and regulations. Responding to non-compliance of laws and regulations in case of employment with listed entities, section 260. So basically, our earlier discussion was mainly for practicing chartered accountants, although I did cover a bit about the employees also. I've already said that earlier all employees were covered. Now only senior professional accountants in service in case of listed entities is covered. Okay. And senior professional accountants are KMPs. And covers acts or omissions or commission, intentional or unintentional. Please note, intentional or unintentional, which is contrary to the prevailing laws and regulations committed by these four kind of people. I've already discussed about it in the earlier slides. Employing organization, those charged with governance of the employing organization, management of the employing organization, or other individuals working for or under the direction of employing organization. Now, what are the additional responsibilities of senior professional accountants in service? In addition to whatever we have discussed, addressing the matter. In addition to the responsibilities, okay, discuss the matter with his immediate superior. In case of KMPs, he must discuss the matter with his immediate superior first. It is mandatory. You cannot jump the ladder and go to chairman immediately. So discuss with immediate superior. And if the immediate superior appears to be involved in the matter, then discuss the matter with the next higher level. Right? Have the consequences of non-compliances or suspected non-compliance rectified, remedied, and mitigated. Okay. Then reduce the risk of reoccurrence. There should not be any recurrence of the similar kind of non-compliance. That also you have to see as in KMP Indian organization, and determine whether disclosure of the matter to the external auditor is needed. This is very, very important. In many of these no-clerk cases, which the employee comes to know about, he will have to report it to the external auditor. That we have to determine whether reporting to external auditor is required or not. And if it is required and you do not report, you may be under suit. And then in further action, what kind of further actions the employee may have to consider? Informing the management of the parent company. Please note, you are a subsidiary. You may be under obligation to report it to the management of the parent company of the matter if the employing organization is a member of the group, disclosing the matter to an appropriate authority as specified under respective law. That is, say for example, SEBI, RBI, etc. Parent company is one angle. Another angle, if there is a mandate, if there is a legal provision that you have to report the matter to particular regulatory body, then you have to report to that. And then resigning. And of course, resigning will not absolve you from the responsibilities. Okay, we have completed no-clerk. Now, I have some case studies, but I thought maybe if we have time, it's already 3:33. So if we have time later on, we can discuss the case studies. And if somebody wants to raise any queries on no-clerk, then we can discuss no-clerk. Otherwise, we can proceed to the next item. What would the organizers say? Gauravji, what would you say?
Sir, we have a question from Khushbu. Let's take one question, then probably we can proceed further.
Sure.
Khushbu, can you hear us? We have allowed your mic. You can ask your question, please.
I can't hear it yet.
Khushbu, can you hear us? Please unmute your mic and speak. You'll have to unmute your mic.
Okay, is there anybody else who has raised the query?
No one else there as of now. Probably we can continue with the session.
Okay.
We'll take the questions.
In that case, if Khushbu can raise the query in next half a minute, fine. Otherwise, we'll go to the next one. We'll discuss the next item and then we can come back to the queries later.
I think we can continue with the session. Meanwhile, if she asks, I'll request you.
Right. By the time I start sharing again, If she raises the query, fine. Okay. So the next item that we are going to discuss is taxation services to audit clients, section 604 of the Code of Ethics. You see, taxation services are something which all of us professionals have been giving to our audit clients since donkey's years. Always we have been providing the taxation services, and in most of the cases, the situation is such that we are the auditors for them. We are also the taxation services provided to them. Right from starting the compliance work to the litigation work, these chartered accountants are providing, who are also doing the audit work, right? For the medium and smaller organizations specifically. Now, for the first time now in this Code of Ethics, following the ISBA Code of Ethics 2018, there are some clear-cut guidelines provided. Okay. Now, it says that providing taxation services to audit client may create some self-review or advocacy threat. And in such cases, the institute wants that you first try and mitigate those threats. Please note, institute only says no to very, very few specific items which we cannot do. Some specific things, some specific services we cannot provide to our auditees from the taxation point of view. Most of the other services they are allowing us to provide, but they have asked us to follow certain procedures to mitigate the self-review and advocacy threat. Okay. First service is tax return preparation. So in tax return preparation, the institute says normally there is no threat, so you don't have to do anything. You can always prepare the tax return of your client, right? Just a minute, please. Okay. Next item is tax calculations for the purpose of preparing accounting entries. Now, preparing tax return is something, but if you are also doing the deferred tax calculation, then that is not the right thing to do, because you are doing the deferred tax calculation and the client is entering the figures in his books of accounts and in his financial statements, and then you are signing it. That creates a self-review threat, because you are yourself the creator of the particular entry and you are also the checker of the particular entry, which obviously is not possible. It should not be done, right? So it says the institute, now the Code of Ethics says in case of public interest entities, you simply cannot do it. In public interest entities, you cannot do the deferred tax calculation or any other tax, or why deferred tax, even the actual tax calculation, you cannot do that. The provision calculation of taxation, that is, you can't do that in case of public interest entities. But in case of non-public interest entities, smaller cases, institute says you can do it, but you can only do it if the persons who are doing the tax calculations are not the persons involved in the course of audit in any way. That means either in your firm, your tax team is separate, your audit team is separate, and the tax team is not involved in audit work and audit team is not involved in tax work. Or if you do not have teams, separate teams, then at least all the people who are doing the audit should be kept away from calculation of the tax preparation, calculation of the tax provision. And the tax provision should be calculated by people who are not connected with the audit in any manner. And then an appropriate review should be done by a separate person in the firm. Then self-review threat will be mitigated. Okay. Next item is tax planning or other tax advisory services. Then again, here both self-review and advocacy threat may come. I'm sure all of us know that there are 5 kinds of threats to independence. They are fundamental to understanding the Code of Ethics. Anyways, Now, in case of tax planning, it says appropriate safeguard should be taken. Appropriate safeguard would be having different team, the audit team different, and the tax planning or tax advisory team should be different. Once that is there, then you can do it. Please note that in tax planning and tax advisory services, even the public interest entities are not barred. Public interest entities, tax calculation is barred, but tax planning and tax advisory services, tax litigation is not barred even for them. However, they want us to have appropriate safeguards and proper documentation that the team is totally separate. Next, tax services involving valuation. Now, valuation for tax purposes only are covered here. We are not, there are other kinds of valuations also. We are not covering those valuations here. They are restricted under different laws. IBBI has its own rules. Let's not discuss that now. But since we are discussing about taxation services to audit clients, here it is taxation service, so only tax valuations are involved. Okay. So taxation valuation would not normally create a threat. If the effect of the valuation on financial statement is immaterial, then it will not create a threat. Okay. Or otherwise, if the valuation is done and it is subject to an external review by taxation authorities or by other regulatory authority, only regulatory or taxation authorities, then also the threat will be mitigated because they are going to check it. But if this is not subject to review, then we have to consider many things before taking the valuation assignment even for tax purposes. Okay. And please note, where the valuation will have a material impact on the financial statement, material and direct impact on the amount of financial statements, then we cannot do it. If it is not material, then we can do it, provided if it is subject to third-party review by tax or regulatory authorities, or otherwise, if it is not subject to such a review, then we should consider the extent to which the valuation methodology is supported by tax law or regulation. If clear-cut methodology is given in any tax law or regulation, then risk is mitigated. The degree of subjectivity, if it is very low, then risk is mitigated. If it is high, then there is risk. We should not touch it. And the reliability and extent of the underlying data on which the valuation is being done, if it is the reliability is very, very high, then the risk is mitigated. Otherwise, it is not. So considering these things, we have to consider, we have to evaluate how much is the risk or threat to our advocacy or self-review. Basically, self-review threat will come here, not advocacy. And considering that, we can take up the valuation assignments for audit clients. Otherwise, we should avoid. Then assistance in the resolution of tax disputes, appeal, tribunal, all these things. So such assignments may create a self-review or advocacy threat. But if the safeguards are taken, the safeguards have already been discussed, then we can always carry out such assignments, provided the safeguards are there. But we have to ensure that we should not become too vocal about the things done by the client, so much so that their wrong things we are placing as right thing, even if it is done by some other partner of our firm who's the tax partner and we are the audit partner. We should limit our representation to the facts of the case and the legal issues involved in it. We should not go out of the way to try and project the client to be right. That is the only thing which the institute has said. Now, this is about the taxation services to audit clients. The Third thing which was deferred is fees related to size of the firm, section 410. Okay. Now, if you remember, there was an 888 promulgation. I don't know how many of you remember it. It was very, very famous and very, very important thing for us. Till this change in the Code of Ethics in 2019 came, which became applicable for 2020. 888 was 8th of August 2008. On 8th of August 2008, the council meeting had passed a lot of things on ethics. And all those things became immediately applicable. And in that, there was restriction on the fees that we take from a particular client also. Okay. Now, it has been streamlined now and changes have been made it to 888. Now it says when the total fees generated from an audit client by the firm expressing the audit opinion represent a large proportion of the revenue of the firm or of one partner or one office of the firm, the independence of that client and concern on that client and concern about losing the client create a self-interest or intimidation threat. Very clear. I don't have to explain it. If half our work is coming from one client of which we are also doing the audit and doing some other services, and half our fees is coming from that, then there is always a threat that the audit will not be properly done, because we will always be under the pressure of the fear of losing that client, or even the drop this point from your report, otherwise we will review, take away the audit assignment or take away all your assignments. So that would create an intimidation threat. So these three threats may come. That is why specific guidance has been given through this code of ethics to us chartered accountants, to practicing chartered accountants. Now it is very important to note here that earlier any CA firm earning up to 5 lakhs rupees did not come under the 888 promulgation for the purpose of the relative size and fees. Now that 5 lakhs has been changed to 20 lakhs. If your total collection is up to 20 lakhs, then you do not fall under this. Only if your collection is total fees, revenue is 20 lakhs above, then only you come under this. Okay. Next, actions that might safeguard increasing the client base and having an appropriate reviewer who do not take that is something which all will do. So there's no point in discussing this. Now, the code of ethics now say where for 2 consecutive years the fees has increased the particular level. Fees from one audit client has increased a particular level, then the firm shall disclose it to the institute. This is what is the current status of code of ethics. Please note it was deferred, and before deferment it was 15% of total fees. Now it is 20% of fees in case of public interest entities and 40% of fees in case of non-public interest entities. It is very important to note here that this applicability is for audit clients. Please note, applicability is for audit clients because your independence judgment is taken basically in case of attestation function, right? So when your attestation function is being carried out, and in those clients, if it is a public interest entity and your total fees of the firm is say 30 lakhs and the fees earned from that under this because it is beyond 20%. But if it is a non-public interest entity, then with 7 lakhs you will not fall under it because it is below 40%. For non-public interest entities, it is 40%. Please, I am repeating it, that where it is applicable for audit assignments, audit entities, please note that the total fees will be your total fees, and The 7 lakh that you are calculating is also the not the audit fees, but the total fees earned from that audit client. The audit fees may be 1 lakh only. So if the total fees earned from the audit client is beyond 20% or beyond 40%, that you have to consider. Earlier, we had to report it to those charged with governance. That is the client itself. My fees from you is 25% of my total revenue. वो हिंदी में एक कहावत है, मुझे मार. It would have been such a scenario. We would have intimated it to the client that you are a very important client, so you can intimidate me. You are very important. I will never be able to leave you. Thankfully, good sense prevailed, and the actual code which has passed, which has become applicable from 1st October 2022 is that for 2 consecutive years, if this happens, then you have to report it to the institute, not to the client. Right? Okay. So 20 lakhs we have already discussed. And please note that this is not applicable in case of audit of government companies, audit of public undertakings, nationalized bank, public financial institutions, or where the appointment of audit is done by the government or a regulator. Right? So this is not applicable to government organizational work. It is applicable to private clients. And 40% for non-public interest entities and 20% for public interest entities. Then only you have to disclose it to the institute. That also has been discussed. So we have covered the changes which have been made from applicable from 1st of October 2022. We can take the questions now. Time permitting, we can go for the case studies on nuclear, or we can go for some other important provisions, whatever the house decides. If the members are interested for more provisions, we can discuss some other important provisions. If the members are interested to discuss case studies on nuclear, we can take case studies on nuclear, and if the time ends, then of course we can add this in. I'm stopping the sharing for the time being.
Thank you, sir. The house is open for questions. Please raise your hand or type your queries in the chat box. We'll take questions one by one.
Would Madam Khushbu open her mic, and was she able to do it?
No, I think, yeah.
Okay.
Sir, I have a question.
Yes.
It was very overwhelming. You know, a lot of things are there, and I'm getting a chance to learn these things. But you know, what do you think, like, sir, how a technology can play a role in you know, correct implementation of code of ethics? Because a lot of things are there. How a person can use technology to you know, implement it right?
Okay. You see, implementing code of ethics is something where direct role of technology in implementing code of ethics may not come, but code of ethics is a very vast subject which has so many things that you have to do. Say, for example, following the standards on auditing. That is a compulsory part, and it falls under code of ethics. If you do not follow, then the code of ethics will be violated and disciplinary action may be taken against you. Now, there, technology may play a very important role. Obviously, in audit, in the whole process of audit, technology plays a very major role. You know, not only in the process of auditing, of conducting the audit, even in documentation of the audit that you do, technology plays a very vital role. And today, in today's era, where the regulatory authorities, some of the regulatory authorities have become very, very stringent, including the Institute of Chartered Accountants of India. 10 years back in disciplinary proceedings, many cases used to get, you know, somehow get the relief, or somehow get reprimand and be saved from getting their names removed from the membership register. But these days are different. You know, these days things are different, and left, right, and center actions are being taken, not only by the Institute of Chartered Accountants of India's disciplinary board, but even by other regulatory authorities, especially by NFRA. And some of the decisions taken by NFRA, let me tell you, are, I don't know, I should not be perhaps uttering it in open forum, but they are extremely harsh, extremely harsh. And I would like to say that in some of the cases, the auditors were, at least I did not find them guilty. They were small, very negligible, unintentional, I cannot even term them as mistakes. Such things have happened, and there also actions have been taken. So we have to be extremely cautious, and definitely technology can play a very important role there.
Thank you, sir. Is there any other, any question? Yeah.
Sudhir, very nice to see you here. Mr. Sudhir Lat has raised his hand.
Yeah. Sudhir ji, I have enabled your mic. Please speak. Please unmute yourself and speak.
Sir, namaskar.
Namaskar, Sudhir ji. Excellent to see you here.
Good to see you, sir. सर ये कोड ऑफ एथिक्स की जो अपडेशन आ रही है, इसकी पब्लिकेशन भी इशू हो गई है क्या सर, इन राइटिंग?
ऐसा है सुधीर जी, 2019 वाला तो देखिए, कोड ऑफ एथिक्स आज के दिन में जो एप्लीकेबल है ना
सर,
4 वॉल्यूम है. नंबर 1 कोड ऑफ एथिक्स 2019, वो वॉल्यूम 1 है, उसमें वॉल्यूम 1 लिखा हुआ नहीं है क्योंकि तब खाली 2019 में वो प्रिंट हो गया था, वो चल रहा है. देयर इज वॉल्यूम 2 व्हिच वाज रिलीज्ड इन 2020. Sir. That is Code of Ethics Volume 2. Then there is Volume 3, which has all the compilation of case decisions, of disciplinary proceedings decisions, and even High Court decisions on Code of Ethics. So these 3 books you will find in green color, जो अपने normal institute का होता है.
That so these already have, sir.
They are all available. आप institute से मंगवा सकते हैं through online mode. Obviously, अब तो आपको physical कहीं भी ब्रांच में या कहीं भी कोई और ऑफिस में दिया नहीं जाता. You have to order it. ये तीनों बुक अवेलेबल है. And then there is a 4th book which contains FAQ. So frequently asked questions का भी एक बुक कोड ऑफ एथिक्स ने ESB ने मतलब एथिकल स्टैंडर्ड बोर्ड ने निकाला है और वो रेड कलर में है. So all these 4 books are important for us. Sir, एक बात और बता देता हूँ. देखिए 1963 में कोड ऑफ एथिक्स आया, 2001 में चेंज हुआ 38 साल बाद, 2009 में चेंज हुआ 8 साल बाद, 2019 में चेंज हुआ 10 साल बाद, 2019 में वापस चेंज हुआ. And already the process has started for revising the code of ethics again. Sir, we have already given a lot of suggestions on change of code of ethics because of the changing scenario, changing market scenario, so many other things वो अपने one-to-one phone पे बात करेंगे नहीं तो. So sir, code of ethics may undergo another change very soon by next year. Okay. ठीक है? That may or may not happen. That's a different issue. But आज के दिन में whatever code of ethics is applicable, that is volume 1, 2, and 3, and FAQ, they are all available with the institute, and you can order it online and buy it, or you can also get the soft copies.
Right. Thank you.
Soft copy तो आपको चाहिए तो मैं भी भिजवा सकता हूँ.
नहीं है sir, soft copy तो है.
Okay.
Right. Okay.
So there is another question from Mr. Subhash. He is asking, you discuss the issue related to taxation service, where these are mentioned in the details, volume 1 or 2.
Where these are mentioned, this is volume 1 part. Volume 1.
So, thank you, sir. I think it was a great session, and we got opportunity to learn a lot of things from you. And it's always been, a great learning whenever I get a chance to meet you. And once again, thank you. And all committee member and participant, thank you so much for joining this webinar. We are actually keep coming with such webinar in future also. To access this webinar, you can actually scan this QR code to join the community and be part of such webinar in future. Thank you so much once again for joining this webinar. And Ravi sir, thank you once again for giving us opportunity to conduct this webinar, and hoping such webinar in future as well. Thank you so much, sir.
Thank you, Gaurav-ji. It's been a pleasure. And I must also thank you for the opportunity. Thanks a lot.
Thank you, sir. Recording would be available in the community, so we'll share the recording. If anyone wants to access the recording, they can actually go on the community page and access this recording. Thank you, sir. Thank you.
Okay. Bye-bye. Bye-bye, everybody.
Thank you.